Today, I'll take a look at the market dynamics of both Clayton and downtown, and we'll see the resulting implications for landlords and tenants. I'll also take a look at the prospects for new construction, both literally and figuratively, and we'll see how Clayton will vie with downtown for large tenants and future development. Let's start with downtown. After a robust 2006 that produced the highest absorption in 10 years, the market slowed considerably in 2007, and we ended the year with negative of 91,000 square feet of absorption. In addition, 2008 is off to a slow start as Bank of America has announced plans to give back 120,000 square feet at 100 North Broadway. In addition to the negative absorption, downtown continues to struggle with limited deal velocity. This is a heads up for landlords and tenants that tenant retention remains critical. Downtown does, however, offer a number of large blocks of contiguous space and opportunities for tenants. On the leasing front, large law firms dominate the scene, but I'll have more on that in a minute. And downtown continues to see a tremendous amount of investment across the entertainment, retail, and residential sectors. The big news in 2007 was the announcement by Centene Corporation to relocate its headquarters from downtown to Clayton, or from Clayton to downtown. Centene has proposed building a $225 million building that contains 700,000 square feet, of which a couple 100,000 feet would be spec. Now, to put this in perspective, this will be the first building since 1989 built in downtown St. Louis since Metropolitan Square was delivered. And it will offer large tenants an option for large blocks of contiguous space. On the entertainment front, Lumiere Place opened to fireworks in December, and the hotel portion, to be anchored by Four Seasons, is set to open in April. Pyramid Construction has proposed the Mercantile Exchange, a $600 million mixed-use complex consisting of office, retail, and residential that will stretch from Washington to Olive Streets. And residential, there was $300 million worth of development in 2007 as nearly 1,200 units were delivered to the market. Now, years ago, this residential activity would have been unheard of. And it leads to a compelling question. Has the frenetic pace of residential development positively impacted the office market? Let's take a look. Between 2000 and 2007, nearly 4,000 residential units were delivered to the market. This doubled the downtown residential population from 5,000 to 10,000 residents. Now, if we overlay Class A vacancy over the same period of time, we'll see that vacancy has remained persistently high, and we ended 2007 at 17%. Therefore, we can conclude that the residential activity has not yet translated into improved fundamentals on the office side. But it's safe to assume that the entertainment, retail, and residential development in downtown contributed to Centene's decision to locate downtown and will set the stage for others to follow. But the big news in downtown is the decisions that law firms are going to make regarding their office space. So let's take a look at this and see what's involved. We have 6 major firms, including the recently merged Blackwell Sanders and Hush Eppenberger. We have 5 major downtown office buildings involved. We have 3 major Clayton office buildings involved, further complicating the situation. We have space requirements that range between 50,000 and 250,000 square feet. So what we have is a total of 900,000 square feet in play. If you think about this, what we have is the proverbial Rubik's Cube of law firm real estate. Think about this. On one side, we have the various firms. If you rotate the cube, you factor in the mix of locations between downtown and Clayton. Rotate it again, and you factor in the size requirements between 50 and 250,000 square feet, and rotate it one last time and figure who's going to go first, second, third, and you can see we have a very complex situation. Now think about this Rubik's Cube. We have 900,000 square feet, and we figure on 10-year leases and an average lease rate of $25 over the term. What we really have is almost $250 million worth of real estate decisions that are going to be made in the next 18 to 24 months. Now, this is simply amazing. I've been doing this 28 years in the real estate business. Hopefully I don't look that old. And I've never seen anything like this. So what are the implications? Well, they're huge. They affect landlords and tenants, rental rates, vacancy and absorption, building valuations, and new construction. So stay tuned because this one's going to be very interesting. Let's go out to Clayton. Clayton stands in stark contrast to downtown. 2007 was a banner year as the market produced 166,000 square feet of positive absorption. This is the second time in the last 3 years that Clayton's hit six-figure absorption. All this activity has led to significant rent growth, which has led to a lack of space across the board and caused developers to pursue projects. To illustrate the Clayton market, let's take a look at the Clayton Class A vacancy chart. At year-end 2006, we stood at just a hair under 10%. And last year, we predicted that based on historical absorption norms, the vacancy rate would fall to 8%. Well, the market activity exceeded our expectations, and we ended 2007 at 6.5%, further solidifying our prediction of a landlord market. Well, guess what this has done to rental rates? Rates have soared 20% in the last 2 years, and we expect this rent growth momentum to continue. To illustrate how tight the Clayton market is, let's take a look at the Clayton skyline. The market activity has led to a lack of large blocks in Clayton. And currently, there are only 5 buildings that have full floors available. The largest block being 33,000 square feet in the Merrill Lynch Center. Now, to put this in perspective, in the universe of floors in Clayton, there's 241 full floors, and only 5 right now are vacant and available. So what does all this leasing activity cause developers to do? It's caused them to look at new development. But only one has had the foresight to proceed on a spec basis, and that's Don Music at Hanley and 40, where he's building 175,000 square foot Meridian. However, Mark Melman Realty, has proposed the Village and has just received TIF approval from the city of Clayton for a mixed-use project consisting of office, 100,000 square feet of office, retail, and a boutique hotel. Coleman Development has proposed Shaw Park Point, a 350,000 square foot building at Brentwood and Forsyth. Montgomery Bank has floated plans for a high-rise on the World News site, and Conrad Properties has proposed a 90,000 square foot building in Old Town. So we've had this stellar leasing activity, and you wonder, well, what are developers waiting for? Well, 3 things. 1, the tightened credit conditions, which Mike and Paul will talk about in just a second. 2, risk aversion. And 3, cost increases. So it's got the developers scrambling for significant pre-leasing commitments, and this is where the large law firms will come into play. Let's take a look at the cost of building a high-rise. Well, it's the same roughly whether it's in downtown or Clayton, approximately $325 to $350 a square foot. But what is different is the rents that those developers have to achieve to justify their costs. In Clayton, those first-year average rents have to be between $33 and $35 a square foot. Now think about this. Those rents support the rent growth that we're going to continue to see in the existing buildings. But in downtown, we have a different story. First-year rents, due to incentives given by the city of St. Louis and the state, tax abatement, TIF, new market tax credits, etc., lower that first-year rental rate that needs to be achieved down to between the $25 and $27 range. So it will be interesting to see what incentives, if Clayton, that they provide to incent developers to proceed in Clayton. Let's look at 2008 and get some predictions. Well, Ballpark Village will be a catalyst, even if it's not up by the All-Star game in '09. However, deal velocity will slow in downtown, and it will remain important for landlords for tenant retention. Law firms, as I noted, will set the tone on the leasing side. And in Clayton, rent growth will continue for the reasons noted. However, absorption will slow. It's not due to a lack of activity. It's going to be simply due to a lack of space in Clayton. And new construction will happen and should happen in Clayton. It's just a matter of when. Thank you very much.